friends, welcome to CA Online. I am Professor Rahul Modi with you, and today we are here to talk about some of the latest amendments which have been brought about in your paper number 4. Before I get on to the nitty-gritties of that, let me take a moment and tell you that people, I know this is not the best of the times that we all are going through, and I'm so sure that you have been hearing about we are together in this, we are together in this from so many of them since so many months. But one simple piece of advice from my side to you as a friend, as a mentor, as a professor, as you may take it, is simply go with the flow. Simply go with the flow. Do not entangle your mind in thinking what next, what next, what next. Those who had opted out are on a different thought of school of thought. Those who had opted in are also on a different school of thought. Get out of that. See, it is harsh, but it's the reality. We all have to understand that the next attempt we can write is the November 2020 attempt. And for that, what I want you to do is very simply just buckle up, pull up your socks and fasten the seat belt and give it your best. Give it as if you would have never thought. Go for the kill. Because now, if this time you miss an opportunity, then there is nothing worthwhile that you would have done. Trust me, I agree that there have been testing times. Some of you have been reading from December. Some of you started in January. Some of them are just the November 2020 attempt students. So they have simply started off. Whatever case it may be, you all are going to land up in the same November 2020 exam. As per the latest meme that I was watching on Instagram, there is one slide which is, coming from May 20. Another slide coming from November 20. But they both go to one attempt only, November 20. So please, just refresh yourself, okay? Just press the F5 button, reboot, refresh and restart, right? So now what we are going to talk about, guys, are the applicable amendments for November 2020, or you can say they are the opt-out amendments of paper number 4, corporate and other economic laws. With this lecture, what I intend to do is, I intend to take you step by step into all the sections which have maybe minor, maybe major amendments. Some of the amendments are temporary, guys. How temporary, sir? They are COVID-19 relaxations. So they don't become a part of the act. They are only for this temporary period that we are going through. Do we get it? All of us? Right. Apart from this, what I would like to talk about is that although I am trying to cover up every possible amendment, right, which has been notified by all the various ministries that we have acts on, like SEBI, Ministry of Corporate Affairs, etc. If the ICAI releases the RTP with any other amendment in it, be rest assured that I will soon upload a video on the RTP November 2020 as well. Don't worry about that. As of now, we will be discussing about each and every amendment applicable and available on hand. But if the ICAI comes up with any other amendment which according to them is also applicable for your exam, I will take care of that and you don't need to worry an ounce for it at all. Okay? So as of now, just go through the video, give it your best shot and read with only one thing, positivity. The only thing you need to have right now is positivity of thoughts, not positivity of any disease. I hope you understand that, right? So just going through this video, so we will start up with our amendments one by one. Okay, let's start. People, we have already talked about the entire section number 164, subsection 1, along with subsection 2. 2 also we have talked with respect to clause A and clause B. But there is no amendment as such in 164, subsection 2. But what has happened is, as per the November 2019 attempt, suggested answers released by the ICAI, there has been one issue which I would like to address to all of you. That is with respect to 164 subsection 2. Now, under 164 subsection 2, which actually talks about failure to file financial statement or annual return, right, for a consecutive period of 3 financial years, or 2B talks about failure to pay, D. What is that? We talk about 5 things over there: debenture, deposit or dividend or interest thereon, right? Now, when we discuss that, I hope you all remember that sometime back only we have discussed that 164 subsection 2 does not apply to, we say, number 1, your independent directors, right? Number 2, your small shareholders director. And number 3, your nominee directors, right? So what our understanding is that these 3 are the type of directors to whom 164 subsection 2 does not apply. However, if at all you check a question asked in November 2019, there was a question on 164.2 and the impact was upon a small shareholders director. As per our normal understanding, it was always there that 164.2 does not apply to a small shareholders director. However, if at all you've gone through the suggested answers released by the ICAI for the purpose of that question, surprisingly, the ICAI has given a suggested which says that 164.2 shall apply to a small shareholders director as well. So if I now re-look at this particular section, my understanding will change. And the understanding will be that independent director, this will be not applicable, 164.2. Nominee director, this will be not applicable, 164.2. But small shareholders director, this will be applicable. This will become applicable, and that too by virtue of what? By virtue of, I will say, suggested answers of the ICAI for November 2019. So if I look at this particular thing, people, the suggested answers of the ICAI for November 2019 attempt have made a change in the interpretation, and according to them, 164 subsection 2, which typically we say is not applicable to a small shareholders director, but according to the ICAI suggested answers for November 19, it becomes applicable. So we now follow the ICAI view on the applicability of disqualification under 164 subsection 2 for a small shareholders director, right? So with this, our view stands in sync with the ICAI's view, and now onwards for 164 subsection 2, only 2 type of directors will have the non-applicability, and they are independent director as well as the nominee director. So wherever we have talked about this, right? So this stands in sync with the ICAI's view given in the suggested answers for November 2019. That is, that the small shareholders director will equally be liable for 164.1 and 164.2. As it is, every director is liable for 164.1. But 2 had exception. But that exception is now been reviewed by the ICAI, and we follow the same. Clear? So it's a clarification from my side that we will stick with the ICAI's view, and small shareholders directors will equally be liable for 164(2) disqualification. So you should pause the video and copy the slide. Done. Okay. So as per a new amendment under rule number 23A, which has been brought about by the Ministry of Corporate Affairs on 14th of February. Wow, what a day. On 14th of February 2020, friends, there has been a big amendment. Not very big, but yeah, a material amendment in the Nidhi rules. And what is that particular amendment? That amendment changes a particular period within which a Nidhi company is supposed to file a particular form called NDH4. So that amendment we are looking at right now. So all of you with me, we will read that together. Okay, come on. So of course it is rule number 23A, compliance with rule 3A by certain Nidhis. So a particular Nidhi company has to comply with this particular rule. What kind of a Nidhi company? We'll check it out. So the Ministry of Corporate Affairs, New Delhi, on the 14th of February 2020. These rules may be called as the Nidhi Second Amendment Rules 2020, Second Amendment. What we have done earlier are the Nidhi Amendment Rules 2019. This is the Second Amendment brought about by the ministry, and we are doing that right now. Come on, let's read that. Every company referred to in Clause B of Rule 2. Okay. So Clause B of Rule number 2. What is that? Now that is nothing but an existing Nidhi. That's an existing Nidhi. So every company referred to in Clause B of Rule 2 and every Nidhi incorporated under the Act. Look at the difference of the words. One is an existing Nidhi and one is a Nidhi incorporated under the Act. What do you mean by the word the Act? The Act meaning Companies Act 2013, right? So read that again. So under Rule 2, Clause B, that is existing Nidhi, and a Nidhi incorporated under the Act, meaning the Companies Act 2013, before the commencement of the Nidhi Amendment Rules 2019, before, okay, so I am a Nidhi incorporated under Companies Act 2013, but incorporated before the Nidhi Amendment Rules 2019, shall also get itself declared as such in accordance with Rule 3A within a period of 1 year. Okay, we know this. Nothing great. No amendments. Hold on. From the date of its incorporation or within a period. Mind it. Here's the change. Here's the change. Within a period of 9 months. 9 months, my friends. Earlier, this point was 6 months. Earlier, this point was 6 months. So 9 months from the date of commencement of the Nidhi Amendment Rules 2019, whichever is later. So either it is 1 year from the date of your incorporation or 9 months from the commencement of the Nidhi Amendment Rules 2019, whichever is later, alligator. So whichever is later. Do we get that? Okay, the proviso. Let's check that out. Provided that in case a company does not comply with the requirements of this rule, it shall not be allowed to file SH7. We know that. Notice to registrar for alteration of share capital and pass 3, return of allotment. We have seen this earlier also. We have prepared a chart on it also. So the only change which comes about under the Nidhi Second Amendment rules which are applicable to you made by the ministry in February 2020 are that the period of 6 months has been extended to 9 months. The period of 6 months has been extended to 9 months. Am I clear with that? Right? So that's your amendment as far as the Nidhi company and the rules to the Nidhi company are concerned. Right? So now friends, what we need to talk about next under section number 149.1 to 149.3 is a big time change. I will not say it's a very, very grave change, but it is a change which serves the need of the hour. We all know that we are passing by the worst scenario as globally we are struck by the pandemic. So in light of the pandemic, Ministry of Corporate Affairs has brought about a lot of relaxations as far as compliance of the Companies Act 2013 is concerned. And in the middle of that, we will go through step by step all of them. But as of now, our discussion is limited to the relaxation as far as COVID-19 is concerned, brought about by the Ministry of Corporate Affairs under section number 149, subsection 3. What is that? Now guys, we all know that every company needs to have at least one resident director, isn't it? Right? So keeping that in mind, which we just now discussed, we are now getting into the COVID relaxations. What is that? Let's check it out. Come on, all of you with me. Now we all know Resident Director 149 subsection 3, right? Just now we have talked about it. But the point to remember over here is the relaxation brought up by the ministry. What's that? To support and enable companies in India to focus on taking necessary measures to address the COVID-19 threat, Ministry of Corporate Affairs White General Circular number 11, 2020, dated 24th March 2020. That was the beginning of the lockdown in our country. Relaxes this requirement for financial year 1920. Relevant provision as stated in the circular is as follows. Read this very carefully. It might not be a great thing, but it's a very relevant thing as far as the current COVID situations are concerned. Read that. Non-compliance of minimum residency in India for a period of at least 182 days, which is what is the requirement. Isn't it? Of at least 182 days by at least one director of every company under section 149 of the Companies Act shall not be treated. I repeat, shall not be treated as a non-compliance for financial year 1920. So, even if you don't make up that period of 182 days, guys, it is still okay because it shall not be treated as a non-compliance. Look at that. So, if you don't comply with the minimum residency period during financial year 1920, it is okay. Why? We are giving this as a benefit, keeping in mind the threat created by COVID-19 globally. Do we get that? Right? So, this is an additional part which we need to talk about as far as section number 149.1 to 149.3 is concerned. Right? But before we go further, guys, into the nitty-gritties of independent director, what I would like to talk about here is that there has been an amendment made with respect to the appointment of an independent director. There has been an amendment with respect to appointment of an independent director. Meaning what? Meaning now every person willing to become an independent director will have to get his name empaneled on a particular database, and from that database companies will select that person as an independent director. Up till now there was no such particular roadmap for me to be appointed as an independent director, but now the roadmap is clear. Ministry of Corporate Affairs has already notified that particular thing. And before we discuss 149 subsection 4, 5, 6, no, we will first talk about, hey, I want to become an independent director. What is the prerequisite? There is not only a database where I need to get my name empaneled, I also need to pass a proficiency self-assessment exam. One more exam? Yes. So even after you become a director, if you want to become an independent director, my friends, don't be in a hurry, because ministry says, wait, we will get you assessed first. We will want you to pass a proficiency self-assessment exam. And It's not like chartered accountancy where you pass at 40 and aggregate should be 50. There the passing is 60. Oh my God, 60? That is exemption. Yes, friends, you need to get an exemption in that particular exam. And that's the rule which has been set up now, right? So let's read the rules which are as good as a prerequisite for a person to become an independent director, right? Let's get started. Come on. So if you read this, Ministry of Corporate Affairs have notified this on 22nd of October 2019. It has come into effect from 2019 October, but it got notified a bit later, right? Okay, so what are they called? These rules may be called as the company's Appointment and Qualification of Directors 5th Amendment Rules 2019. 5th Amendment Rules. They shall come into force with effect from 1st day of December. So the effective date is December 2019, 1st December, right? Let's read that. In the company's Appointment and Qualification of Director Rules 2014, hereinafter referred to as the principal rules, for rule number 6, following rules shall be substituted. So we are now reading the prerequisites of any person to become an independent director, right? Read that. Compliance is required by a person eligible and willing. Look at the words. Eligible and willing to be appointed as an independent director. What are these two words talking about? One, you should be eligible, meaning qualified as well as not disqualified. Willing meaning it has to be done voluntarily. Okay, read that. Read this carefully because we will have your proficiency test and also your empanelment to a particular database. Let's read. Every individual who has been appointed as an independent director. Look at the words used, guys. Has been appointed, meaning what? You are already appointed as an independent director in a company. Okay. On the date of commencement of the company's Appointment and Qualification of Directors 5th Amendment Rules 2019, basically these rules, shall within a period of 7 months, I'll tell you a small history behind this 7 months. Up till February 2020, this 7 months was amended as 5 months. So if I would be taking this lecture in February 2020, I would have said, people, 5 months. No. But in April 2020, in 2020 April, the ministry again made an amendment. Said, no boss, 5 months are too less. Give them 2 more months. So they made 7 months. They made 7 months, right? So now from April 2020, it is 7 months. So all those who are referring to the old amendment will say, no, it is 5 months. But friends, that's an amendment of February 2020. But we are doing the latest things. And as per the April 2020 amendment, it is 7 months, right? So I'll read that again. Every individual who has been appointed as an independent director in a company on the date of commencement of these rules shall within a period of 7 months from such commencement, meaning once these rules have commenced, within 7 months, and I will not be surprised if this period of 7 months is further extended. Why? Keeping in mind the threat of COVID-19 which is spread world over. So we will not be surprised if we see this 7 months being extended. But as on date, it remains 7 months, right? So you are an existing independent director of a company and these rules have been notified already. So you are supposed to do it within 7 months. What are you supposed to do? Wait. We will go step by step, bro. Come on. Going further. 7 months from such commencement. B. Every individual who intends to get appointed as an independent director. Look at the words. If you look at A, it says has been appointed. If you look at B, intends to get appointed. A, you are an existing independent director. B, you are proposed to be appointed as an independent director. Do we get that? Okay. So if he intends to get appointed as an independent director in a company after such commencement, after the commencement of these rules, shall referring to mandatory, circle that word, shall before such appointment apply online to the institute for inclusion of his name in the data bank for a period of 1 year, 5 year, or maybe lifetime. Your choice. The choice is purely of that individual. And from time to time take steps as specified in sub-rule 2, which is coming below, till he continues to hold the office of an independent director in any company. So people, what are you supposed to do? You are an existing independent director. We give you 7 months. You are proposed to be appointed independent director. We will ask you to first apply online. So if you are existing, still apply within 7 months. If you are proposed to be appointed, you can't get appointed unless you apply. So what are you supposed to do? Apply. Apply to the institute. Sir, which institute? Wait. You will have to apply to an institute for getting your name empaneled in the database of independent directors, maybe for 1 year, 5 years, or maybe your entire lifetime. Your choice, buddy. Right? Let's read. Provided that any individual, including an individual not having DIN, not having your director's identification number also, may voluntarily apply to the institute for inclusion of his name in the data bank. Your choice. So what you are supposed to do, if you are already an independent director, you would definitely have a DIN. Come on guys. I hope I'm clear. But if you are proposed to be appointed as an independent director, it's quite as well possible that you don't have a DIN. That's okay. Non-possession of DIN does not make you disqualified from getting your name included in the data bank. So even if you don't have a DIN, it's okay, bro. Get your name empaneled in the data bank, right? Okay. Second, sub-rule 2. Every individual whose name has been so included in the data bank shall file, shall refers to a mandate, an application for renewal for a further period of 1 year, 5 year, or his lifetime within a period of 30 days from the date of expiry of the period up to which the name of the individual was applied for inclusion in the data bank, failing which the name of such individual shall stand removed from the data bank. So people, it's purely voluntary, your choice. If you want your name to be included for 1 year, go for it. 5 years, go for it. Lifetime, go for it. But mind you, if you go for 1 year and 5 years, then after the completion of 1 year, after the completion of 5 years, respectively, you will have to go for renewal. But if you've gone for lifetime, there is no renewal. There is only one life. You're not playing Super Mario. Anyways, provided that no application for renewal shall be filed by an individual who has paid lifetime fees. See boss, it's a simple calculation. Why do we want you to get renewals done for 1 year, 5 year? It's all about money, honey. I want the money. So 1 year you pay, again you get renewed, again pay. 5 years you pay, again get renewed, again you pay. But lifetime, bro, if you're paid for lifetime, that's perfectly fine. That's okay, no renewals. Right? So people, once again. First, you may be an existing independent director of a company, or you may be a proposed independent director of a company. All of them, whether existing or proposed, you have to make an online application to the institute. Sir, which institute? Wait. Okay, Sari? Listen. So now you have to make an application to an institute and get your name in the data bank. It could be for 1 year, 5 years, your lifetime, purely your choice. Even if you don't possess a DIN and you want to get your name in the data bank, go for it. Nothing wrong. Reading further. every independent director, just a minute, every independent director shall submit, again a mandate, a declaration of compliance in sub-rule 1 and sub-rule 2 to the board. Each time he submits a declaration required under 149.7. What is this? Guys, we all know what is 149.7. I'll tell you. Guys, 149.7 is nothing but a declaration given by the person appointed as an independent director that yes, he is independent. That's the declaration of independence. So now onwards, you don't just give your declaration of independence. Along with that declaration of independence, you also give a declaration that you have complied with these rules also. Meaning, you have already applied to the institute and your name is existing in the data bank maintained by the institute. So you will give two declarations. One, that you are independent. Two, that your name is maintained in the data bank also. Clear? Going further. Every individual whose name is so included in the data bank under sub-rule 1 shall pass. Oh my God. The minute you read the word pass, you feel scared of failure. Yeah, read. Shall pass an online proficiency self-assessment test. Okay. Online proficiency self-assessment test conducted by the institute. Sir, which institute? ICAI? No, don't get too sentimental. Within a period of 1 year, from the date of inclusion of his name in the data bank, failing which, see, I told you, the minute you read the word pass, there is always a fear of failure. So failing which, his name shall stand removed from the data bank of the institute. So here also within 1 year, you have to pass online proficiency self-assessment test. So it's no longer easy for you to become an independent director. You don't just become an independent director just like that. Pass an online proficiency self-assessment test. Then we will allow you to become an independent director. Alright. Failing which your name will be removed. Beware. Provided that an individual shall not be required, shall not be required to pass the online proficiency self-assessment test when he has served as a director. Or KMP, director or KMP, either or, for a total period of not less than 10 years. So if you have a experience of 10 years, either as a director or as a KMP, you are exempt. Bravo! 10 years, as on the date of inclusion of his name in the data bank. You should hold at least a 10-year experience in one or more of the following. Oh, what is that? A listed public company. So you should have been a director or KMP in a listed public company. For how long? 10 years. Then you are exempt. Or B, unlisted public company having a paid-up share capital of 10 crores or more. Oh, so you should have a paid-up share capital of 10 crores or more if you are a unlisted but public company. So either a listed public company or unlisted public company having a paid-up share capital of 10 crores or more. Or body corporate listed on a recognized stock exchange. Any body corporate which is listed on a recognized stock exchange. So in any of these three, if you have a 10-year experience, 10 years, as on the date of your inclusion, name in the data bank, then exempted. Exempted from what? The online proficiency self-assessment test. But we are in India. We are very smart. So what can happen, I will tell you. There could be multiple peoples over here who will think, sir, I was a director for 1 year in 10 companies. What? I was a director for 1 year, but I was a director in 10 companies for one year. So that makes my total experience as 10 years. Right? Nonsense. Read. Provided further For thoughts like that, there is a proviso. For the purpose of calculation of the period of 10 years referred to in the first proviso, 10 years experience, any period during which an individual was acting as a director or as a KMP in two or more companies or body corporate at the same time shall be counted only once. Only once. So if you have been a director of 10 companies for 1 year at the same time, I will count that 1 year only. Guys, come on. We all know, as per section number 165, that a person can act as a director of 20 companies at any given point of time. So you will say, sir, I was a director in 20 companies for 6 months. Done. 10 years are over. No, we will count that as one. It has to be one after the another, guys. It has to be actually 10 years. Not 10 companies, one year. I hope I'm clear, right? So, if you have a 10 years experience as a director or as a KMP, you are exempted. Exempted from what? From passing the online proficiency self-assessment test. But you are still liable to get your name included in the data bank. In the data bank maintained by the institute. Am I clear? People, are you with me? So, before you become an independent director, or even if you are an existing independent director, you have to get your name included in the data bank maintained by the institute. Right? Your choice for 1 year, 5 year, or your lifetime. Your choice. Basically, fees will differ. Clear? But if you still want to be an independent director, please pass online proficiency self-assessment test. However, if you already have an experience of 10 years, actually 10 years, not 10 companies one year at the same point of time, it has to be 10 years, right? As a director or KMP, exempted. Exempted from passing the online proficiency self-assessment test. Clear? Okay, now, institute. What is that institute? Don't get angry. Check it out, bro. Come on, with me. Explanation. For the purpose of this rule, the expression institute. Now we read. Institute means the Indian Institute of Corporate Affairs. For a minute, I am sure most of you thought it was the ICAI. Guys, world does not revolve in and around the ICAI. Our world revolves around the ICAI. Right? Okay. Means the Indian Institute of Corporate Affairs at Manesar notified under 150 subsection 1 of the Companies Act as the Institute for Creation and Maintenance of Data Bank of Independent Directors. Done? So this is the institute where you need to get yourself empaneled, and the data bank maintained by them should contain your name, whether you are an existing independent director or you are a proposed to be appointed independent director. Clear? All of you, right? People, are you with me? Come on. B. An individual who has obtained the score of not less than 60%. 60 for us is too much, I know, but still, not less than 60% in aggregate in the online proficiency self-assessment test shall be deemed to have passed such test. Meaning, you should score at least 60. This is not your CA exam. At least 60. And the most beautiful point is the last one. I love it. There shall be no limit on the number of attempts an individual may take for passing the online proficiency self-assessment test. 2 minutes silence for that, people, after the video. Nonsense. They believe that we as chartered accountants are so much used to attempt, May to May via November. We are so much used to that for independent director also they are saying it's okay, bro. You can take n number of attempts to pass. Anyways, so guys, institute means the Indian Institute of Corporate Affairs at Manesar, right? And you have to score at least 60 in the proficiency test and no limit on the number of attempts. However, your proficiency test becomes exempt if you have an experience of 10 years as a director or key managerial person in a listed public company, unlisted public company, having a paid up share capital of 10 crores or more, or a body corporate who has securities listed. Clear? So that is it as far as the latest amendment. As far as the latest amendment is concerned for prerequisite to become an independent director. Are we clear with it? Right? When did it come into picture? It got notified with effect from 1st December 2019. However, within this only, there has been a latest amendment in April 2020 for existing independent directors. It's not 5 months, it's 7 months. 5 months was in February. In April, they have again amended that to 7 months. Am I clear? Right. Friends, now going towards the end of section number 149, subsection 4 to subsection 13, basically the end of independent directors, we would like to talk about again a COVID relaxation given by the Ministry of Corporate Affairs for the purpose of independent directors. We have read through under the independent directors schedule number 4, where we see one particular point that at least once in a year, all the independent directors of the company should have one meeting where no other director is present, isn't it? Right? Let's have a look at the COVID relaxation given with respect to the meeting of independent directors. Come on, let's check it out. I'll read that for you. The COVID relaxations, COVID-19 relaxations. Ministry of Corporate Affairs by General Circular 11/2020, dated 24th March 2020, provided the following compliance relaxation. This is not a compliance, my friends. This is a relaxation from the compliance. Read. First, no additional fees will be charged. Good enough? No additional fees will be charged for late filing of any documents, returns, statements, etc. required under the Act from 1st April 2020 to 30th September 2020. Wow. So if there were any compliances to be done by you under the Companies Act 2013, ranging from a period of April 20 to September 20, and you don't do that, it's okay. We won't charge any late filing fees. So any declaration, any forms you are supposed to submit and you don't submit for that span of April to September 2020, no late filing fees. Right? One more. Independent directors. Now this one is crucial. Read that with me. Independent directors are required to hold at least one. We all know that, right? At least one. At least one meeting without the attendance of non-independent directors, right? And members of management. So it's only a pure independent directors meet, right? Every year we have seen that, Schedule 4. However, for the year 1920, if the independent directors of the company have not been able to hold even one meeting, the same shall not be viewed as a violation. So it's a kind of an exemption, kind of a benefit. Why? Because of the global COVID-19 threat. One meeting of independent directors exclusive, not conducted, that's fine. Right? So this is one COVID relaxation with respect to your independent directors. Right? So people, right now what we have done, we have completed our discussion on section number 150, that is manner of selection of independent director and maintenance of data bank. In our previous discussion, that was independent director 149.4 to 149.13. There we saw that if I want to become an independent director, or even if I am a existing independent director, I have to get my name empaneled with the institute, the Indian Institute of Corporate Affairs at Manesar. That has been notified. Who will maintain a data bank? right? So this section, we read the basics of the maintenance of data bank. Am I correct? Now, there are rules drafted and notified for the data bank as well. So after having completed our discussion on section number 150, I will now take you to the rules. The rules regarding the data bank for independent directors, right? Let's check it out. Come on. So we have read all the subsections of section number 150. But now, what do we read? This, my friends. We read the latest notification. And that latest notification is regarding the rules. Let's read that. So the Ministry of Corporate Affairs, New Delhi, 22nd October 2019. Creation and maintenance of the data bank. Right? Read that. Like we read in the independent directors as well. Read. The Indian Institute of Corporate Affairs shall create, it's a mandate, and maintain a data bank of person willing and eligible. We read this there also, willing and eligible, to be appointed as independent directors. And such data bank shall be online data bank. But obviously, everything is going on online, which shall be placed on the website of the institute. Reading that further. The data bank referred to in sub-rule 1 shall contain following details in respect of each person included, each person. So the Indian Institute of Corporate Affairs Manesar, who is going to be maintaining this data bank, will contain all the following details of that person whose name is going to be included for being appointed as a independent director. Clear? Each person included in the data bank to be eligible and willing to be appointed as a independent director. DIN, but we also know one thing, that even if you don't have a DIN, your name could be included. If applicable, they write. Clear? Income tax, PAN, they want everything. Name, surname in full, father's name, date of birth, gender, nationality, occupation, full address with PIN code, present and permanent, phone number, email ID, educational and professional qualification, experience or expertise if any pending criminal proceeding. Superb. What a requirement. What an expectation. So any pending criminal proceeding as specified in 164(1)(d). Oh, what is 164(1)(d)? Disqualification of a director. Any offence involving moral turpitude, imprisonment of not less than 6 months, 5 years. Do we recollect that, guys? That's what they are talking about. So if there is any pending criminal proceedings as per 164(1)(d), mention it here. Otherwise, you are disqualified, bro. Come on. The list of LLP in which he is or was a designated partner, along with name of the LLP, nature of industry, duration with dates. Okay. So basically we need all your general information so as to keep a background check, right? Okay. List of companies in which he is or was a director, along with name of the company, nature of industry, nature of directorship, executive, non-executive, independent, nominee, etc. Whichever kind of director you were, I want the name of the company, the industry, and the type of your directorship, whether it is or whether it was. Get it? And duration with dates. Fine. So I need your present, past directorship details. I need your present, past designated partner details, if at all you were at any LLP. Get it? People, are you with me? Hello? Right. Information available in the data bank shall be provided. Shall. Mandatory. Only to companies required to appoint independent director after paying a reasonable fees. Oh, so I, being the Institute of Corporate Affairs manager, will take fees from you, the independent director. So I maintain your data. And if there is a company who wants to appoint you as a independent director and they come to the Indian Institute of Corporate Affairs and ask for your data, I will ask fees from them also. Wow. So the Indian Institute of Corporate Affairs manager is going to charge fees from the person whose data is going to be maintained, the company who wants to access to that data. Beautiful. Person whose name is included in the data bank may restrict his personal information to the institute to be disclosed in the data bank. Oh, you want to restrict your information? Done. You may. But I hope you know that whenever we fill up any form, be it any website, be it any institute, there is something called as asterisk mark, mandatory fields. We know that, right? Yeah, so that is supposed to be given. Some fields are option which you may not fill up. Your choice. Okay. Any individual whose name appears in the data bank shall make changes. Shall. Mandatory. Circle that. In his particulars within 30 days of such change through web-based framework made available by the institute for this purpose. Okay. So whatever details you have given to the Indian Institute of Corporate Affairs manager who is maintaining your data bank, if there is any change in the details which you have submitted, please intimate them within 30 days. Done. A disclaimer shall be conspicuously displayed on the website. Conspicuously displayed on the website hosting the data bank that a company must carry out its own due diligence. Before appointment of any person as an independent director. Oh, this is like a disclaimer, a limited liability. That look, boss, I in my data bank have thousands of people whose details are available. But if you want to appoint any of them as an independent director of your company, bro, first you conduct a due diligence at your end. Don't hold me liable. I am just a data bank who is maintaining data of people who are giving it. That's it. I am not responsible for whom you appoint as independent director. That is your personal choice, bro. That is your choice. You decide whom you want to appoint after conducting due diligence. Clear? People, come on. So that's a good point, a disclaimer. Limited liability. They are behaving just like us, auditors. Next, the institute shall, with prior approval of CG, fix a reasonable fees to be charged. From individual for inclusion of their names in the data bank of independent director. Of course, I have told this to you earlier that the Institute of Corporate Affairs will charge fees, and B, companies for providing information on independent directors. I told you both, right? So the Indian Institute of Corporate Affairs manager has two sources of income or revenue. One, from the person who wants to get his name put up in the data bank. Two, from the company who wants to access to that data. Clear? Come on. For the purpose of this rule expression, persons willing and eligible to be appointed as independent director shall include individuals already serving as independent director. Tell me something I don't know. Because we already know that even if you're already an independent director, acting as an independent director in any company, you still have to enroll your name in the data bank within 5 months or 7 months. Guys, 5 months was February 2020 amendment. April 2020 amendment is 7 months. We know that, right? Further, duties of the institute, Indian Institute of Corporate Affairs, Manesar. The institute shall comply with the following in respect of individuals referred to in Sub-Rule 1 of 6 of the company's Appointment and Qualification of Directors Rules 2014. Basically, the independent directors. No one else. What is the duty of the institute? A. They will conduct an online proficiency self-assessment test. Have we done this earlier? Yes. Under independent directors, come on. Okay. So they will conduct your online proficiency self-assessment test, covering companies law, securities law, basic accountancy, such other areas relevant to the functioning of an individual acting as independent director. Oh my God. This is as good as giving the first group of final CA all over again. Company law, security law, accountancy. Oh my God. Okay. Next, what is the other part of their duty? Prepare basic study material, online lessons, including audio visual for easy reference of individual taking online proficiency self-assessment test. Oh, something similar to what we are doing. Okay. Provide an option for individuals to take advanced test in the area specified in clause A, meaning company law, security law, accountancy, and prepare the necessary advanced study material in this respect, provided that no separate fees shall be charged by institute in respect of ABC. Thank God. They will not charge extra fees for study material, online classes, because they will already take fees from you for getting your name in the data bank. Of course. Institute shall daily share with the CG cumulative list of all individuals. What kind of list? A. Whose name have been included in the data bank. Individuals list will be given on day-to-day basis. Every day, which individual got added, along with the date of inclusion and their PAN or passport. In case of foreign director, not required to have income tax. Okay. So either if you are an Indian director, your PAN. If you are a foreign director, then your passport number. We need some proof. Okay, day-to-day basis. This list will go to the CG. Done. B. Whose application for inclusion in the data bank have been rejected. Okay, we will send this also, along with the grounds and date of such rejection, and whose name have been removed from the data bank, along with the grounds and dates of such removal. Wait, 3 things we are going to submit to the CG. That too on a day-to-day basis, daily. 1. Whose name got included. 2. Whose name got removed. And 3. Whose application got rejected. So whose name got included, whose name got removed, and 3rd, whose application got rejected. Clear? Okay. That's the duty of the Indian Institute of Corporate Affairs, Manesar, who is maintaining the data bank of independent directors. Panel. There shall be a panel, a panel of not more than 10 members, nominated by the CG for the purpose of approving the outline of the courses and study material prepared by the institute. Okay, so we said above that you will have to pass an online proficiency self-assessment test, company law, security law, accountancy, but hey, who will prepare the syllabus, the study material, etc.? We will have a panel set up by the CG, not more than 10. Who are they? Check it out. Shall consist of the Secretary of MCA or his nominee, of course, Director General and Chief Executive Officer of the Institute, meaning the Indian Institute of Corporate Affairs, or his nominee. So Secretary MCA, Director General or CEO of the Institute, 1 member nominated by Department of Economic Affairs, 1 member nominated by Department of Public Enterprises, 1 member nominated by the SEBI. Of course, there is security law involved. At least 1 representative from the stock exchange nominated by the CG. At least 1 representative from industry nominated by CG. And at least 1 representative from the academia nominated by the CG. At least one have been used at 3 places. F, G, H. Please circle them. at least one, which will ensure that your number can be more than one also, but it can never go beyond 10. Check this out. Not more than 10. Not more than 10. Right? So we have some eminent personalities who are going to be a part of the panel, who will decide the syllabus, the kind of study material, kind of examination question for online proficiency self-assessment test for empaneling your name in the data bank of independent directors. Clear? So that's your panel. We saw what details you're supposed to give. We saw what is the duty of the panel. We also saw the duty of the institute, and we also saw the panel who will set out your study material, your examination, etc. Right? So people, please understand that this was the set of rules that we need to understand as far as section number 150 is concerned. What is 150? Data bank. Data bank for appointment of independent director. So you don't have to go here and there. The Indian Institute of Corporate Affairs, Manesar, has prepared a data bank because they are in charge of maintaining a data bank of independent directors. So whether you are an existing independent director or a new proposed to be appointed independent director, you have to get yourself empaneled here. And you might as well have to pass online proficiency self-assessment test. Sir, you said you might as well have to pass. Why might? Guys, you forgot. Just in the previous section we were talking about that if I have 10 years experience as a director or KMP of a listed public company or unlisted public company having a paid-up share capital of 10 crores or more, or a body corporate listed, do you recollect? Then I am not supposed to give online proficiency self-assessment test. Am I clear? Right? That's it. So this wraps up our combined discussion on independent director, which starts at section number 149.4, ends at 149.13, right? Along with that, section number 150, which talks about the data bank for maintaining the name and details of independent directors from which companies can select their appropriate independent director, but after conducting their own due diligence. Clear? Right? So this wraps up your discussion on section 149.4 to 13, independent directors, and the data bank, section number 150. Right? So people, we already know the basics and the nitty-gritty of the DIN, the Directors Identification Number, isn't it? Right from section number 153 up till section number 159. We have done it all. But what we need to do is an important rule, an amendment, along with a COVID-19 relaxation on it. The Rule 12B. The Rule 12B. Let's read that. It's a very interesting one, along with the relaxation. Let's check it out. Come on. Directors of company required to file e-form active. E-form active. This has been a very important form put out by the Ministry of Corporate Affairs, basically the ROC, just to know whether the company is running or not and the directors are validly performing their duties or not. Let's check it out. So 1. Where a company governed by Rule 25A of the Companies Incorporation Rules 2014 fails to file e-form active, company has to notify that I am an active company. Otherwise, you could be dormant as well. Active within the period specified therein. Director's identification number allotted to its existing directors shall be marked as director of active non-complaint company. Wow. You are an active company, but you have not filed your e-form active. So the directors of your company, existing directors of your company, will have a DIN remark. And the DIN remark will be director of an active non-complaint company. Meaning your company did not comply with the e-form active filing. Do you get that? that could be a problem for the directors of such company, right? Where the DIN of a director has been marked as director of active non-complaint company. Such director shall take all necessary steps to ensure that all companies governed by Rule 25 of the Companies Incorporation Rules 2014, where such director has been so appointed, file e-form active. So guys, this is a very beautiful point if you understand. Company does not file e-form active. So directors are marked as director of an active non-complaint company. So it is a remark, a bad one against your DIN. So you are now put up with the responsibility that wherever you are a director and whichever such company has not filed e-form active, it's your duty to ensure company files that e-form active. Get it? Read further. After all the companies referred to in Subrule 2, all such companies where you are a director and who have not filed e-form active, file e-form active, the DIN of such director shall be marked as director of active complaint company. Complaint company meaning what? The company where you are a director has complied with the requirements of filing e-form active. Do we get that? So until your company files that e-form, you will be considered as director of an active non-complaint company. It's a bad remark. But once the filing is done, director of an active complaint company. Get it? Further. Now the COVID-19 relaxation on the same. The ministry in general circular has issued that further clarification regarding relaxation in filing fees for forms DIR 3 KYC, DIR 3 KYC web and active e-form active, which we just discussed above. Ministry has recently deployed in its news and important updates section that DIN holders marked as deactivated due to non-filing of DIR 3 KYC or DIR 3 KYC web, and those companies whose compliance status has been marked as active non-complaint. Why active non-complaint? Because you did not file e-form active. Due to non-filing of active company tagging identities and verification, active e-form are encouraged to become complaint once again in pursuance of general circular mentioned above and file forms DIR 3 KYC, DIR 3 KYC web and active as the case may be between here's the relaxation, 1st April 2020 to 30th September 2020 without April 1st 2020 to September 30 2020 without any filing fees of INR 5,000 or 10,000 respectively. Without, the most crucial point is without. So I know that these have been the most trying times for all of us, but the ministry comes up with a remedy. They say file without the fees of 5,000 or 10,000 as the case may be. Do we get that? A very, very benevolent step. Of course, an amendment regarding e-form active along with a benevolence or a kind gesture shown by the ministry as far as the waiver of filing fees is concerned. Do we get this? Rule 12B along with the COVID-19 relaxation. Clear? Okay. So friends, we are talking about the board meeting part. Board meeting which is covered under our discussion of directors part number D. Part number D, which has only relatively less sections like 173, 174, 175, isn't it? Of that, under section 173, we have talked about things like the frequency between the board meetings, right? Also, certain discussions which can be done via video conferencing, certain which are not allowed to be done via video conferencing, isn't it? But what I currently want to highlight is, again, the COVID-19 relaxations given by the Ministry of Corporate Affairs with respect to the frequency of the board meeting and also with respect to the board meeting conducted via video conferencing or audio video conferencing, right? So just pay attention very carefully. They are very simple, very easy, but relevant, but highly relevant. They are the COVID-19 relaxations under board meeting. Check it out with me. So now, we already know the basics of the frequency, etc. But what I want to highlight over here is this part. All of you be with me. Very carefully read this. Come on. So the Ministry of Corporate Affairs via its Circular 11/2020 dated 24th March 2020 as a special measure. We know this. Due to COVID-19 outbreak extends the mandatory requirement of holding meetings of the board of the companies within the intervals provided in section 173 by a period of 60 days till next 2 quarters, meaning till 30th September, accordingly as a one-time relaxation. One-time relaxation. Don't misinterpret as a amendment in the Companies Act. No, people. One thing, be very clear. Whatever COVID-19 relaxations I am talking, they are all one time. They are not amendment to the law. They are a circular which serves only a temporary purpose. Don't misinterpret them as amendments in the Companies Act. Clear? Read. One time relaxation. The gap between 2 consecutive meetings, which ordinarily is how much? You tell me. Come on. 120 days, correct, which now becomes how much? Check it out. Of the board may extend to 180 days. They have given an extension by 60 days. Till the next 2 quarters instead of 120. So, from April 1, 2020 until September 30, 2020, the time gap which was 120 days maximum between 2 board meetings has now been extended to 180 days. But mind you, it is a one-time relaxation. This is not an amendment in the section. It's a circular, temporary. COVID-19 relaxation. Time gap was 120 maximum earlier. But for the first 2 quarters of this year, it has become 180 days instead of 120. Clear? Okay. Going a bit further in the same section. Pay attention. As far as Rule 3 is concerned, no change in the meetings of the board. But there is one thing. Rule number 4. Let's read that together. Rule 4 of the company's meeting of the board and its powers, Rules 2014. Read. Matters not to be dealt, not to be dealt in a meeting through video conferencing or other audio visual means. Not to be dealt. Approval of annual financial statement, board report, prospectus, audit committee meeting for consideration of financial statement, including CFS, if any to be approved under 134, and approval of matter relating to amalgamation, merger, demerger, acquisition and takeover. We know this. These are matters you cannot deal with in a board meeting held via video conferencing. We know this, right? Okay. Some points to remember along with the COVID relaxation. Proviso to Rule 4.1 provides that wherever there is quorum present in a meeting through physical presence of directors, any other director may participate video conferencing through video or other audio visual means. Meaning, if my physical quorum is present, other directors can participate via video conferencing. Sir, we know this. I know that you know, but we need to read this in order to understand the relaxation. Read the relaxation. 4.2. For the period beginning from the commencement of company's meeting of board and its powers amendment rules 2020, that is 19th of March, and ending on 30th June 2020, meetings on matters referred to in 4.1. 4.1 was matters not possible via video conferencing may be held through video conferencing or other audio visual means in accordance with Rule 3. Even this is a temporary relaxation. They have given the beginning period and the ending period also. Do we get this? So for a temporary period, all those matters which could not be discussed via video conferencing as per rule number 4, meaning these matters, now for the temporary period can be discussed via video conferencing only because we are suffering from the COVID-19 outbreak. This is again a relaxation for COVID-19. Again, mind you, this is a temporary relaxation. I hope I'm clear. People, do you get these two amendments under section number 173? One is the time gap between two board meetings, and other one is matters which cannot be discussed via video conferencing ordinarily, but during the period of the COVID-19 outbreak, they also can be discussed via video conferencing or other audio visual means. Clear? Okay. Sub-rule 3. For the purposes of first proviso to subsection 1. Sir, where is the first proviso? Wait, people. No spoilers. Wait. Except with the prior approval of the company by a resolution. Prior approval of the company by a resolution, a company shall not enter into a transaction or transactions where transaction or transaction to be entered into. This is most important from examination viewpoint. A. As contract or arrangement with respect to clause A to E of subsection 1 of 188 with criteria as mentioned below. Sale, purchase or supply of any goods or material directly or through appointment of agent amounting to 10% or more of the turnover of the company as mentioned in clause A and clause E respectively of subsection 1 of section 188. So here, if I just make a summary, rules to section 188.1. Let's check out how it works. So for the first point, that is goods materials, what is the limit I should check? Limits for members OR. Limits for members, ordinary resolution. If it is with respect to goods or materials, what is it? Check it out. 10% or more of the turnover of the company, greater than or equal to 10% of turnover of the company. Second, what should that be? Buying, selling of property. Check that out. Selling or otherwise disposing of or buying of any property through directly or through appointment of agent amounting to 10% or more of the net worth of the company, net worth, as mentioned in clause B and E to subsection 1 of 188. It is how much? 10% or more, greater than or equal to 10% of net worth of company. Okay. Third, leasing of property. Just check it out. If there is a leasing of property, then it is 10% or more of the turnover of the company, as mentioned in clause C to 188.1. Okay, let's check that out again. Again, the point is turnover. The point is turnover. Greater than or equal to, come on, 10% of turnover of the company. So just check it out, people. Goods, materials, greater than or equal to 10% of turnover. Buying, selling property, greater than or equal to 10% of net worth. Leasing of property, greater than or equal to 10% of turnover. One more. Availing or rendering of any services, directly or through appointment of agent amounting to 10% or more of the turnover of the company, again, as mentioned in clause D and E, respectively of 188.1. Okay. Either availing or rendering services. How much is that? Greater than or equal to 10% of turnover of the company, people. Just check it out. So if I have to take approval of my members for a related party transaction, limits are as under. Only one limit is net worth. Buying, selling of property. Rest all limits are what? All limits are what, people? Check it out. All are turnover. Greater than or equal to 10% of turnover, greater than or equal to 10% of turnover, and greater than or equal to 10% of turnover. Now, certain typical points. Pay attention. Don't forget. Limits as per latest audited balance sheet, limits to be checked per related party per annum. Per related party per annum. Approval of members by OR only when limit exceeds. Check this out, people. You should remember this. Please pause the video and copy this first. Done. People, this is very crucial. This is the limit you need to take into consideration when you are taking approval of members for approval of a related party transaction. Do we get it? Now please understand, limits are per financial year per related party. So always look at the limits as per the preceding latest audited balance sheet and take the approvals in the current financial year. Let's say the last year's turnover was 100 crores. Current year 10% is going to be 10 crores. So how will the approvals be taken into consideration? People, let's say you are doing 5 transactions in 1 year. First 4 transactions of 2 crores, 2 crores, 2 crores, 2 crores. No approval. Third transaction, also 2. Fourth, also 2. Fifth is 3 crores. Cumulative, it becomes 11 crores, which is more than 10%. So only for 5th transaction onwards, approval of members shall be required. Do we get it? All of you, members approval, going a bit further. It is hereby clarified that limits specified in this subclause 1 to 4 shall apply, shall apply for transaction or transactions to be entered into either individually or taken together with previous transaction during the financial year. So it is per party per annum. Got it? Further. So people, as per the explanation, we already know that the above limits will become pro rata if it is for a part of the year. Do we know that? Yeah, if it is for a period less than a year, then the above limits become prorated. Whether it is 60 lakhs, 84 lakhs or 120 lakhs. But the next proviso is a very important one. A beautiful point which has been amended. Let's read that. Come on. So if I read this, provided that, read that with me all of you. This. Provided that remuneration in excess of above limits. Remuneration in excess of above limits may be paid by passing a special resolution. Meaning what? Meaning above the limits are 60 lakhs, 84 lakhs, 120 lakhs, 120 lakhs plus what? 0.01% of the effective capital in excess of 250 crores. Yeah, but let's say my company does not want to pay 60, 84, 120 or 120 plus 0.01%. Then what does your company want to pay? My company wants to pay more. I want to pay more than 60, more than 84, more than 120. Can my company do so? Sir, but you have a loss. I know I have a loss, but still my company wants to pay more. Can we do that? Yes, very well. Go for it. Pay. But first take member special resolution. Where I have a limit of 60, I want to pay 2 crores. Where I have a limit of 84, I want to pay 5 crores. Can I do all of this? Yes. Provided members give you a special resolution approval. That is 75% or more. Which we very well know is not going to be possible. Guys, this is a beautiful amendment, very optimum in nature, whereby the limits set are these: 60, 84, 120, 120 plus 0.01%. However, your company says, no bro, we want to pay more because these are our managerial person. Go ahead, pay more. But for whatever excess you want to pay, you will have to take your members special resolution approval. Do we get all of this? Yeah. So this is very, very crucial. Simple but crucial amendment. Correct? Okay now. So let us get into the details of the asterisk which is put upon the company secretary. Mind you people, that is an amendment. Earlier, the asterisk had a particular clarification whereby any company having a paid up share capital of 5 crores or more was liable to appoint a full-time company secretary. But that has been amended by the ministry. Let's check it out. So if I now look at the asterisk of company secretary, check this. Ministry of Corporate Affairs, New Delhi, 3rd January 2020. Latest amendment. Check it out. They shall be applicable in respect of financial years commencing on or after 1st April 2020, meaning the current financial year. Right? Okay, 2021. Every private company, look at that. Look at that. Every private company which has a paid up share capital of 10 crores or more, 10 crores or more, shall have a whole-time company secretary. People, if I take you to the start point of this particular section, right, where it says every listed company and every other public company, having a paid up share capital of 10 crores or more shall mandate whole-time key managerial person. We already have talked about this earlier, right? But who are those whole-time managerial or key managerial person? They are MD, CEO or manager, or in their absence a WTD, plus a company secretary, plus a CFO. But if I am a private company, obviously this is applicable only to listed public and unlisted public. But if I am a private company and if my paid up share capital is 10 crores or more now, earlier it was any company 5 crores or more, but now they have very clearly said every private company, this is the amendment, you better read this. Every private company which has a paid up share capital of 10 crores or more shall have a whole-time company secretary. Mind you, a private company does not need to have any full-time key managerial person. But as far as a company secretary is concerned, there is a mandate. Earlier, the limits were 5 crores. Now they have increased that to 10 crores. Earlier, the company secretary point was applicable to any company. Now they have said every private company having a paid-up share capital of 10 crores or more shall have compulsion whole-time company secretary. So a private company may not have any other key managerial person, but is under a compulsion to appoint a whole-time company secretary if its paid-up share capital is 10 crores or more. Do we get this point? All of you? Right? So this is the latest amendment which overrides the earlier amendment of 5 crores. Please do not read through that. That's now gone. And now the new amendment is private company, paid-up share capital of 10 crores or more. Correct? Okay. So people, now what we need to check is the type of company for whom secretarial audit is applicable. But here there is an amendment. What is the amendment? Let's check it out. Which kind of companies are supposed to get their secretarial audit done? Read that with me. Come on. Companies requiring secretarial audit of bigger companies we are talking about. Every listed company, okay, and a company belonging to other class of companies as may be prescribed shall annex with its board report made in terms of 134(3) a secretarial audit report given by the company secretary in practice in such form. Okay, we know this. Rule 9 of the Companies Appointment and Remuneration of Managerial Personnel Rule 2014. The secretarial audit report for the purpose of section number 2041. The other class of companies, the other class of companies shall be as follows. Every public company having a paid-up share capital of 50 crores or more. Okay, we know this. Or every public company having a turnover of 250 crores or more. Okay, but now wait. So 50 crores of paid-up share capital or a turnover of 250 crores. The Ministry of Corporate Affairs, New Delhi, 3rd January 2020. They shall be applicable in respect of financial years commencing on or after 1/4/2020. 1st April 2020, guys. Check it out. Or paid-up share capital of 50 crores or more, turnover of 250 crores or more, or every company having outstanding loans or borrowings. Outstanding loans or borrowings. Just check that out. Outstanding loans or borrowings from banks or public financial institution of 100 crores or more. Loans or borrowings from banks or PFI of 100 crores or more. This is the additional point. So I may not have a paid-up share capital of 50 crores or more. I may not have a turnover of 250 crores or more. But if I have outstanding loans or borrowings from banks or PFI of 100 crores or more, then to my company will be liable for secretarial audit. Do we get that? One additional point which has been amended. Read. For the purpose of this sub-rule, the explanation, it is hereby clarified that paid-up share capital, turnover, outstanding loans, borrowings, as the case may be existing on the last date of latest audited financial statement shall be taken into account. Tell me something I don't know. We already know this, right? Thumb rule. That's it, people. So they have added one point as far as the applicability of secretarial audit is concerned, which is the outstanding loans or borrowings. The loans and borrowings point has been added over here from banks or public financial institution worth 100 crores or more. Do we get it? Right? Okay. So now, people, we have already completed the entire discussion of section number 230, along with section number 231. But what I want you to understand is that under section number 230, where we talk about the compromise and arrangement, basically we call that as the internal reconstruction part. In that, there were two subsections which were not notified so far, but now the Ministry of Corporate Affairs have notified those two subsections as well. They are subsection 11 and subsection 12. Under section 230, the compromise arrangement, we have seen subsection 1 to subsection 10. But now what we are going to talk about are the amendments. The amendments with respect to subsection 11 and 12. So very diligently, let us get started and we will read that together. Okay? Come on, let's start. So notified with effect from, just check out the notification date, 3rd of February 2020. So this is the latest notification as far as chapter number 15, compromise arrangement, is concerned with respect to section 230. Let's read that. Subsection 11. Any compromise or arrangement may include takeover offer. Compromise arrangement may include a takeover offer. Typically, we understand compromise and arrangement under section 230 as a internal reconstruction. But here, they are saying it may include a takeover offer, okay, made in such manner as may be prescribed. Provided that in case of listed companies, mind you, in case of listed companies, takeover offer shall be, it's a mandate, circle that word shall be as per the regulations framed by the SEBI. Obviously, since I am a listed public company, I will have my first and primary regulator as SEBI. So, your compromise arrangement scheme may include a takeover offer. First thing, Ministry of Corporate Affairs, New Delhi, dated 3rd of February 2020. Okay, so now what we read about was the subsection 11. Now what we are reading are some rules. Let's read. So rule 5, a member of the company shall make an application, shall make an application for arrangement for the purpose of takeover. So who is making an application? Member of the company. Member of the company is making an application. Shall make an application for arrangement for the purpose of takeover offer in terms of 230 subsection 11. Okay. When such member along with any other member holds not less than 3/4 of the shares in the company. Not less than 3/4 of the shares in the company. And such application has been filed for acquiring any part of the remaining shares. Please understand. So I am a member of the company who is holding how much? Member along with other members. How much am I holding? Greater than or equal to 75% of shares. So what has happened over here, guys? I am a member, maybe alone, or I am a member along with other members who are holding at least not less than 3/4. 3/4 meaning 75% of the shares. So if we are holding 75% of the shares, we will make an application under section number 230, subsection 11 for takeover. And what do we want to take over? The remaining 25% of the shares. Do we get that? Right? Okay. Explanation 1. For the purpose of this particular understanding, please look at the explanation. Shares. Shares means equity shares. Obviously, equity shares of the company carrying voting rights and includes any security such as depository receipts, which entitles the holder thereof to exercise voting rights. So basically, we are looking at voting. shares with voting rights. Okay, so we are looking at equity. So if I alone or I along with other members, we collectively hold 75% of the shares, then we will make an application under section number 230 subsection 11 for takeover. Takeover of what? The balance 25% of the shares. Clear? Further. Explanation 2. Nothing in this sub-rule shall apply. Nothing in this sub-rule shall apply to any transfer or transmission. Transmission is by operation of law. You should know that. By an operation of law. Transmission of shares. Transmission of shares through a contract, arrangement or succession, as the case may be, or any transfer made in pursuance of any statutory or regulatory requirement. Meaning what? Read this once again, all of you. Come on, tell me the meaning. Nothing in this sub-rule shall apply. What? What are we talking about? This sub-rule, what we read just now, we are talking about that. What are we saying? That if at all by virtue of any transfer, transmission of shares through any contract, arrangement, succession as the case may be, if shares are transferred by any contract, arrangement or succession, or made in pursuance, any transfer or transmission made in pursuance of any statutory or regulatory requirement, then the requirement of complying with section number 230 subsection 11 does not come into picture. So section number 230 subsection 11 does not apply to any transfer or transmission of shares through a contract, arrangement or succession as the case may be, or any transfer made in pursuance of any statutory or regulatory requirement. Am I clear? So when we voluntarily want to take over the remaining 25%, that time we will have to comply with this 230 subsection 11. But if it's by virtue of any contract, arrangement or any succession or any statutory or regulatory requirement, this sub-rule does not apply. Am I clear? Very, very, very important. Nothing in this sub-rule shall apply. Shall apply, meaning this sub-rule will not be applicable to the following what we read. Clear? Further. Now, an application of arrangement for takeover. Now we are coming back to the ordinary understanding that we want to go for takeover. Okay. Shall contain. What will the application contain? The application shall contain. Contain what? Let's look at it. A. The report of a registered valuer. Registered valuer comes under chapter number 17 of the Companies Act 2013. We have it in our syllabus. Registered valuer. Report of the registered valuer disclosing the details of the valuation of the shares proposed to be acquired. Valuation of shares which we want to acquire. How many shares do we want to acquire? 25%. To be acquired by the member after taking into account the following factors. Okay. So first of all, while making an application for arrangement as a takeover, we need to submit a report by the registered valuer. But while we give the report of the registered valuer which contains the valuation of the shares which we wish to take over, following factors have to be considered. Which ones? Let's check it out. 1. Highest price paid by any person or group of persons for acquisition of shares during last 12 months. Oh, so I want to take over 25%, but I will give a registered valuer's report as to the valuation of those shares. But while giving that report, factors like number 1, what was the highest price paid for this particular share in the last 12 months? Okay, give that disclosure. Fine. So the highest price, that's our first consideration. Second, fair price. Fair price of shares of the company to be determined by the registered valuer after taking into account. To be determined by the registered valuer after taking into account valuation parameters including return on net worth, book value of shares, EPS, your price earning multiple, that is your PE, vis-a-vis the industry average, and such other parameters as are customary for the valuation of shares of such company. So basically, whenever we hold at least 3/4 of the value of the shares carrying voting rights, and under section number 230, that is compromise or arrangement, we want to propose a takeover. Takeover of what? Remaining 25% of the shares, then we can make an application. Either I am alone holding 75 or me along with other members. We are holding 75%. So we will make an application, but along with the application, we will have to give a report of the registered valuer. And that report should contain two things. One, the highest price paid for that share during the last 12 months and the fair price of that share. Clear? That's your section number 230. 230 subsection 11, the rules on that, which is what we are reading. Read further. Details of the bank account. Now that's okay. Nothing great. Details of bank account to be opened separately. What do we call this as? Tell me, come on. This is nothing but your escrow account by the member wherein a sum of the amount not less than one half of the total consideration of the takeover is deposited. You made an offer, bro. How much shares do you hold? Either you alone or maybe along with other members. You are holding 3/4, 75% of the share. You propose a takeover of the remaining 25%. You give a valuer's report, and you will also need to open a separate escrow account, whereby let's say the consideration of the shares comes to around 100 crores. You will have to deposit at least half. So not less than is what they say. So it can be greater also. Half. That is 50%. At least 50% of the consideration should be deposited in that escrow account. Do we get that? Right? Very simple. So 230 subsection 11 says what? First, come on. First of all, you are holding 75%, 3/4 of the value of the shares, right? So you propose a takeover. And when you propose a takeover, the takeover is for what? The balance 25% of the shares. And now when you are proposing a takeover, you will make an application. And for that purpose, you will have to submit a registered valuer's report, which will contain two things. Highest price paid for that share during the last 12 months and the fair price of that share arrived by the registered valuer. Along with that, you will also need to open up an escrow account where you will have to deposit at least 50% of the consideration. Done? So if you are a member holding 3/4 of the voting power based shares, you will go for 230 subsection 11. Done? Going further, come on. 230 subsection 12. Even that stands notified. Let's read that. Same effective date. Both the subsections. Read that further. Section number 230, subsection 12. An aggrieved party may make. Aggrieved party. Okay. Let's read. An aggrieved party may meaning, of course, it's a voluntary thing, may make an application to the tribunal. Here comes the NCLT again. In the event of any grievances with respect to the takeover offer of companies other than listed companies in such manner as may be prescribed by the tribunal, on application, pass such order as it may deem fit. See guys, why have they said other than listed public companies? Because we have read above itself. Here, listed companies, we will have to follow the SEBI regulation. So as far as listed companies are concerned, the requisite authority is the SEBI. But when we talk about other than listed company and you are a aggrieved party under subsection 12 of 230, why? Because there is a takeover happening as per subsection 11 and you are not in conformity with that. You are aggrieved by that takeover. Go to the NCLT, make an application and NCLT will pass an order as it may deem fit. So let's say I'll put subsection 11 and 12 together this way. I, along with couple of other members, we hold 75% of the shares having voting power, right? Now, we make an application under section 230 that we also want to go for the balance 25% shares. So that is called as takeover. So we will make an offer. Registered value, a report is given, everything is done. So now we wish to buy the remaining 25%. Now, out of that 25%, if there are few shareholders, few members who are aggrieved with this particular takeover, right, they have a right given, and that right is that they can appeal to the NCLT and NCLT will pass an order as it may deem fit. Clear? Subsection 11 and 12 of section number 230 notified. Do we get this part? Yeah. Just to wrap up this particular thing, explanation. For removal of doubts, it's hereby declared that provisions of section 66. What is 66? Section number 66. Nonsense. It is reduction of capital. Shall not apply to the reduction of share capital effected in pursuance of the order of the tribunal under this section. So if at all, by virtue of this section 230 and order of the tribunal, there is some reduction in your share capital, because of that reduction in the share capital, you don't need to comply with provisions of section 66. Because if I look at it in a layman's, presumption, I will say this is reduction of capital. Please comply with section 66. No, you don't have to do that, because the reduction of capital happened in pursuance of section number 230, not in pursuance of section number 66. Agreed, your capital got reduced, but it was by virtue of section number 230. So while you are having a reduction of capital under section 230, please do not comply with the requirements of section 66. Clear? Clear? All of us. Going further. One more last thing. Ministry of Corporate Affairs, New Delhi, 3rd February 2020. Application under section 230. An application under subsection 12 of 230 may be made. Who's making that application, by the way? Who's making that application? Tell me. The aggrieved party may be made in form number NCLT 1 and shall be accompanied by such documents as may be mentioned in Annexure B. That's okay. All you need to remember here is NCLT 1. That's it. That's it, people. NCLT 1, that is the form you need to file. For what? Because you are an aggrieved party and takeover is happening, you don't like it, you want to make an application to NCLT 1. Clear? Right? So these are the two subsections of section number 230 which we have discussed, 11 and 12, newly notified. This completes our discussion on section number 230. Done? Okay. Friends, now there has been an amendment in one of the penalty sections under the Securities Contract Regulation Act 1956, and that is under section number 23, capital A, clause A. Section number 23, capital A, clause A, there has been an amendment again made by, we have talked about this under SEBI. I repeat that over here also, that under SEBI as well as the SCRA, Securities Contract Regulation Act 1956, there have been changes, amendments brought about by Finance Act number 2 of 2019 with effect from 20th January 2020. 20th January 2020 onwards, there have been changes with respect to penalties, be it SEBI, be it Securities Contract Regulation Act. So let us check out the amendment made under the Securities Contract Regulation Act, section number 23, capital A, clause A. Very simple change, but a change. Let's read that together. Come on. So penalties imposed under other section. That's the general heading. 23, capital A, clause A, the contravention. Failure to furnish any information, document, book, returns or report to a recognized stock exchange. Wait, that is what the earlier section said. Now the amendment says, or to the board. So whether you do a failure in submitting documents, reports, returns to the stock exchange or to the board itself, board meaning SEBI, the Securities and Exchange Board of India, within the time specified in the listing agreement or conditions or bylaws of the stock exchange or the act or rules made thereunder. So not only are you bound by the regulations made by the stock exchange or the listing agreement, you are also bound to follow the rules, the bylaws of the act, the Securities Contract Regulation Act 1956 and the Securities Contract Regulation Rules 1957. So if you fail to submit documents, returns or reports to the stock exchange or to the board itself within the time specified by listing agreement of the stock exchange or within the time limit given by the act or rules made thereunder, then or who furnishes false, incorrect or incomplete information, document, book, return or report, the penalty, let's check it out. The penalty is a fine of at least 1 lakh, which may extend to 1 lakh per day, during which such failure continues, subject to a maximum of 1 crore. Subject to a maximum of 1 crore. Clear? All of us? So that is the change brought about under section number 23, capital A, clause A of the Securities Contract Regulation Act 1956 by Finance Act number 2 of 2019 with effect from 20th January 2020. Okay. So people, now what we are going to talk about are few amendments. Amendments made under the SEBI Act 1992 and they have been notified with effect from 20th January 2020. Yes friends, this very year those amendments have been notified. To start with, our first amendment is amendment in the penalties, section number 15C. Yes, you heard it. It is 15C. Let's check it out. Come on. We will all read that together very carefully. It's a very simple amendment. Nothing great over here, but it's an amendment after all. Come on. So, penalty for failure to redress investors' grievance. Investors' grievance. There was a penalty on this earlier as well. However, there has been an addition to it. Let's check it out. So, if any listed company or any person who is registered as an intermediary after having called upon by the board in writing, who's the board? Of course, it's the SEBI. In writing, including, this is the new part, the addition, including by any means of electronic communication, to redress the grievance of investors. By any means of electronic communication is the addition, right? To redress the grievances of investor, fails to redress such grievances within the time specified by the board, such company or intermediary shall be liable. Let's read that together. Shall be liable to a penalty which shall not be less than 1 lakh. Not be less than 1 lakh. This is common. We have seen that in so many penalties, not less than 1 lakh, but which may extend to 1 lakh for each day. 1 lakh for each day during which such failure continues, subject to a maximum of 1 crore. Again the same. So the additional part over here is the communication which has been made by any means of electronic communication also will be considered as a valid complaint made. Am I clear? Right? Okay, so this was inserted by the Finance Act number 2 of 2019 with effect from, come on, tell that with me. Yes, 20th January 2020. Done? That's your section number 15C. Okay. Now, we will go further and we will talk about section number 15F. Section number 15F, even this has been amended. All the amendments currently that we are talking about in the penalty part of SEBI, friends, they are made by the Finance Act number 2 of 2019, right? And they have been brought up with effect from 20th January 2020. right? So 15F was a penalty on stockbroker. We have done the initial part of that, right? Now what we will do is, there are three parts to that: 15F, A, B and C. The A and B part have undergone an amendment. The C part remains as it is. So we will talk about the A and B points first, right? All of you with me, start reading. Come on. So penalty in case of stockbroker, right? If any person who is registered as a stockbroker under this act, the SEBI Act 1992, then I have made a kind of a table which will help us analyze the nature of default and the penalty which can be levied, right? So 15FA, let's read the A point first. Fails to issue contract notes. Wait, what is a contract note, guys? Tell me. Contract note is as good as a bill. When you purchase anything, right? Do you get a bill for that? Yeah. Similarly, whenever you will deal in securities, you will get a bill, which will be nothing but a contract note. Okay, read that. Fails to issue. Who is failing to issue? Stockbroker. So when a stockbroker fails to issue a contract note in the form and manner specified by the stock exchange of which such broker is a member. So every exchange will have a particular format to be followed for issuing the contract note. However, you don't issue the contract note as per the specific format, then be ready for the penalty. What is that? Check it out. A penalty which shall not be less than 1 lakh. Okay, same. But which may extend to 1 crore. For which the contract note was required to be issued by that broker. So minimum 1 lakh, maximum up to 1 crore, right? That's the change, the amended part, right? So 15FA, failure to issue contract note as per the format of the stock exchange, there will be a penalty on the stockbroker. Now 15FB is what we are reading. FB, okay, fine. Read that. So if so the B point, 15FB, the stockbroker fails to deliver any security or fails to make payment of the amount due to the investor in the manner within the period specified in the regulations. So either you don't deliver the security to me or you don't make the payment due to me within the specified time. The penalty, let's check that out. A penalty which shall not be less than 1 lakh but which may extend to 1 lakh for each day. 1 lakh for each day during which such failure continues, subject to a maximum of 1 crore. If I compare, pay attention, if I compare 15FA, that had minimum penalty 1 lakh, maximum 1 crore. That's it. It stops there. But if I look at 15FB, it has a minimum penalty of 1 lakh. But it again says that it could extend to 1 lakh for every day during which such failure continues. And it may extend up to maximum 1 crore. Am I clear? All of us? So these are the amended versions of the penalty applicable which will be levied upon a stockbroker, right? For failure to issue contract note or failure to deliver the security or not making the payment within the specified time. 15FA and FB. Is it done? Okay. Now, people, we have talked about penalty for insider trading. Okay. We have also talked about fraudulent behavior in the stock markets, right? But there has been an additional levy. A new penalty has been introduced altogether. That is 15HAA. 15HAA. Earlier, we have talked about 15G, 15H, 15HA, 15HB. But there is a new penalty, 15HAA, right? So please pay a lot of attention to this one. I agree, at the end of the day, it's only a penalty, but a new one brought up, right? Let's check it out. All of you with me, read that carefully. penalty. Penalty for alteration, destruction, etc. Alteration, destruction, etc. of records and failure to protect electronic database of the board. Board meaning SEBI. Okay. Any person who A, knowingly alters, willfully you are doing it, alters, destroys, mutilates, conceals, falsifies or makes a false entry. Wow. Most of the CA articles could be held liable here, making false entries. Okay. In any information record, document, including electronic records, which is required under this Act, the SEBI Act 1992, or any rules or regulations made thereunder, so as to impede, obstruct, or influence the investigation. Oh, so what was the motive behind falsifying, mutilating, or making wrong entries? You wanted to divert the attention of the authorities conducting investigation or conducting an inquiry or audit. So you had a guilty mind. Okay. Inquiry, audit, inspection, or proper administration of any matter within jurisdiction of the board. So you had a guilty mind because you wanted to impede, obstruct, or influence. You did not have a clear conscience. Okay. So if any person has done that, A, explanation. For the purpose of this clause, a person shall be deemed to have altered, concealed, destroyed such information, record or document in case he knowingly fails to, the word is important over here, knowingly fails to immediately report the matter. Okay, so you don't do it, but if you come to know about it and you knowingly do not report that matter also. Okay. Immediately report the matter to the board or fails to preserve the same till such information continues to be relevant to any investigation, inquiry, audit, inspection or proceeding which may be initiated by the board and conclusion thereof. So here we don't just penalize the person who has done it, but we also penalize the person who comes to know about it but does not report that matter to the board. Very comprehensive. Reading further. B, without being authorized to do so. Now you don't even have authority. Without being authorized to do so, access or tries to access, or denies of access or modifies access parameters to the regulatory data in the database. Oh, so basically you're a hacker, bro. You've done the hacking. Okay, fine. C, without being authorized to do so. Again, you have no authority. Downloads, extracts, copies or reproduces in any form the regulatory data maintained in the system database. So in the B point, you either wrongfully try to access it or deny or block access of some people. In the C point, without authority, you're downloading or extracting information. Seems like a web series, guys, right? Anyways, D, knowingly introduces, any computer virus. Okay, fine. Or other computer contaminant into the system database and brings out a trading halt. Guys, we all are aware that National Stock Exchange Limited was proposed to be listed. It was supposed to become a listed public company, right? But there was a hack in its database, in its software. That's the reason there was a due diligence being conducted by Deloitte. Right, so this is one such example which I wanted to quote over here. Anyways, going further, without authorization disrupts the functioning of the system database, knowingly damages, So basically you are doing it all with a guilty mind. Knowingly damages, destroys, deletes, alters, diminishes in value or utility or affects by any means the regulatory data in the system database, or wait there, or guys, what importance does this or have in our law? We know it already. Comma, 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 or. All the points are or. Comma, 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 and. All the points are and. So here it was A, B, C, D, E, F, or G. Meaning, if you are any person who is found guilty of either A or B or C or D or E or F or G. Okay, fine. Knowingly provides, again, knowingly provides any assistance to or causes any other person to do any of the acts specified in A to F. Meaning, bro, you don't do it yourself, but you get it done. Oh, very good. So you have learned to play politics. You don't do it yourself, you get it done. Okay. Shall be liable. Now the main point. The penalty, the newly introduced penalty. Shall be liable to a penalty which shall not be less than 1 lakh, but which may extend to 10 crores, mind you. Up till now, it was 1 crore. Now it is 10 crores or 3 times. Or 3 times the amount of profit made out of such act, whichever is higher. Whichever is higher. Minimum is 1 lakh. Maximum is either or 10 crores or 3 times the amount of profits made, whichever is higher. Do we get that? So basically, this penalty is a newly introduced penalty. Of course, it has been inserted by Finance Act 2019, number 2, the second Finance Act, with effect from 28th January 2020. But this has been done so that we can secure our databases. We can secure our databases. So any person who tries to disrupt the database, falsify the database, grant access, take access, block access, either do it yourself or get it done, you are going to be liable for a penalty. Minimum 1 lakh, maximum 10 crores or 3 times the amount of profits you make, whichever is higher. Is that clear? So these are the amendments in the penalties which have been brought about in the Act of SEBI by Finance Act number 2 of 2019. Are we clear? Okay. So people, now we have already completed our entire discussion on the definitions of person resident in India, person resident outside India, and also we have seen a lot of examples, right? Now, there is no amendment as such, but if at all you go through the revised study material issued by the ICAI, right? In that, what they have done is, earlier what we would do, we would always take the residential status of a person as on a particular financial year. Meaning, I will say, if I stayed in India for a period of more than 182 days in the preceding financial year, and in the current financial year, I went out of India, but not for employment, not for business, not for uncertain period, then for that financial year, I am a PRII, person resident in India. Do you agree? Do you agree with that? But what the ICAI has done is that in the revised study module, what they have done is that they take the residential status as on a particular date. Meaning, if I have come to India on a particular date, they will derive my residential status on that date. So, I don't know if you are understanding, there is a clarification, just a clarification, that the residential status is not for a year. It is from a particular date that a person will be resident or a non-resident. PRII, PROI. That's from a particular date. But there is a note. There is no amendment in this provision. That is section number 2V of FEMA. However, as per the revised study material of the ICAI, that is August 2019 edition, answers of few questions are changed considering the fact that residential status is not for a year, rather is being from a particular date. So it does not affect our discussion or explanation or understanding in any way. But there is just a word of caution. Just a word of caution that please look at the question very, very carefully. Look at the words used in the question, only then draft your answers accordingly, right? Look at the date mentioned, look at the requirement, whether it's for a year or a particular date. Then answer whether the person is a PRII or a PROI. There is no amendment in this, I repeat again, but it's just a word of caution so that you don't blindly answer the questions as for a financial year, for a financial year. Look at the requirement. If it is as on a particular date, answer accordingly. Clear? Okay. So people, we have completed our entire discussion on export of goods, services, software, section number 7 of the Foreign Exchange Management Act 1999. Now, what we have to talk about are few minor amendments. See, you know the entire procedure, right from giving the declaration until the realization and also export against advances. We know all of that, fully done. But what we are now looking at are 4 small changes in whatever you have learned already, right? So these are the changes which have come up in 2 parts. One has come up in December 2019 with effect from December 2019, and the second part has come into effect from March 2020, right? Let's look at them very, very diligently. Come on. So we are looking at rule number 4. Rule number 4 was exemption from declaration. Do we recollect that? Our chart has been prepared. Declaration, exemption from declaration, and prior approval. So we are looking at exemption from declaration. Let's check it out. All of you with me. So exemption, regulation number 4. So we are looking at Foreign Exchange Management Export of Goods and Services Regulation 2015. The same thing, nothing new. Notwithstanding anything contained in regulation 3, export of goods, software may be made. Goods, software, we already know this. That this is applicable only with respect to goods and software. May be made without furnishing the declaration. That's the reason we call this as exemption. Declaration in the following cases. We know all these things, but there has been an addition to it. Let's check it out. Look at that EA. After E, we have EA. Just check this point out, all of us. This one. This is a new point in the exemption category. So, re-export. We already know about re-export. That is a part of exemptions from declaration, but this one is different. Re-export of leased aircraft, leased aircraft or leased helicopter and or engines. So, either the aircraft or helicopter and the engine or engines or auxiliary power units. Repossessed by overseas lessor. So lessor is outside India. We are the lessee. We have procured either the aircraft or the helicopter or the engine or the auxiliary power unit under lease. Okay. Repossessed by overseas lessor and duly deregistered by the DGCA, Director General of Civil Aviation, on the request of irrevocable deregistration. And export request authorization, IDERA, irrevocable deregistration and export request authorization holder under Cape Town Convention, subject to the permission by DGCA, that is the Ministry of Civil Aviation, for such exports. So, if at all you have re-exported a leased aircraft or a leased helicopter, or you have re-exported a leased engine or a leased auxiliary power unit, repossessed by the overseas lessor and duly deregistered by the DGCA, as per the Cape Town Convention, then for that export also there is no need to make any declaration. The takeaway point over here is that this has to be as per the Cape Town Convention. what you will need to keep in mind is the Cape Town Convention. And what has been re-exported over here? 4 things. Number 1, aircraft. Number 2, helicopter. Number 3, engines. Number 4, APU, auxiliary power unit. So please remember these 4 things: aircraft, helicopter, engine, auxiliary power units. And when you see them along with the Cape Town Convention, please remember that their export requires no declaration. They are exempted. They are exempted. Do we get that? Yeah, so this is one of the most relevant thing as of now. The First Amendment under the export regulations. Do we get this? All of you, did you number them? 1, 2, 3, 4. Did you number them, guys? Please remember, numbering will help you recollect that faster. Clear? Okay. So now, this was the First Amendment. Going a bit further from here, exempted category. This came with effect from, I'll just show that to you. Check this out. Inserted with effect from 9th of December 2019. 9th of December 2019. White notification number so and so, dated 3rd of December 2019. Clear? Right? So this was our first amendment as far as the export regulations of FEMA are concerned. Right? Going a bit further. Now, check this out. Can we just read the first line over here, all of us together? And just check out, do we know that particular period? Read. Period within which export value of goods, services, software to be realized. Regulation 9. Do we know that? Obviously, we have made a chart on it as well. Nonsense. We know that fully. Yes or no? 9 months, 15 months, 9 months, etc. Right? Okay. Let's read. What is the amendment? It's a very easy amendment, but at 3 different places. So these 3 and the above one totally becomes 4. Read. The amount representing full export value of goods. I'm reading the first point. Software services exported shall be realized, shall, and repatriated to India within 9 months. Tell me something I don't know. We already know this. Or, okay, so now I'm telling you something which you don't know. Or within such period as may be specified by the Reserve Bank in consultation with the government from time to time. So technically it was always 9 months, but now they have extended the period as may be specified by the RBI in consultation with the government. That's the amendment. That's the amendment. Very simple, guys, nothing great. So I'll mark this as the first one. Under realization and repatriation, this is the first one. Done? Okay, going further. So the ordinary realization and repatriation time is 9 months. Now it can be extended to such a period as may be specified by the Reserve Bank in consultation with the government. Going further. A. That where the goods are exported to a warehouse export. It's a part of our chart. Established outside India with the permission of the Reserve Bank. Amount representing full export value of goods exported shall be paid to the authorized dealer as soon as it is realized, and in any case within 15 months. Again, we know this. But what is the amendment? Check it out. Or within such period as may be specified by the Reserve Bank in consultation with the government from the time of shipment of goods. Done. That's the same point, guys. Above also it was the same. Or within such time as may be specified by the Reserve Bank in consultation with the government. Period is the same. You have to remember 9 months, 15 months, or the time specified by Reserve Bank. Nothing great. Going further. One more point. B. Further that Reserve Bank or subject to the directions issued by that bank in this behalf, authorized dealer may, for a sufficient and reasonable cause shown, extend the said period. Said period. Which is the said period? The above period is the said period. Clear? Okay. Anyways. Guys, I know this sounds a bit funny, but this is what it is. The three amendments. The three amendments brought about in the export regulations. Clear? The realization and repatriation time regulation, 3 amendments. And the exemption category, 1 amendment. Clear? Reading further. Okay, so this exemption, that relaxation from declaration was with effect from December 19. And like I said, the other 3 are with respect from, I'll just show you this one. Here it is. Amended by Foreign Exchange Management, Export of Goods and Services Amendment Regulation 2020 with effect from 31st March 2020. Done? That's it, people. Nothing great. So this is what you need to know as far as your Foreign Exchange Management Export Regulation amendments are concerned. Right? Okay. So people, these were our amendments for the November 2020 examination. But I have said this at the start of my video and I repeat it. If at all the ICAI comes up with any other notified amendment applicable for your examination, I will be doing that for you for sure. 100% will be doing that. And as it is, once the RTP November 2020 is out, I will be uploading a video where we will talk about in detail the full discussion on the November 2020 RTP as well. Right? So on this note, I hope and I believe that you have understood all the amendments and you will do it very thoroughly. Right? So all the best, do well, go for the kill. Right? Thank you.